Hello, everybody. Kirk Spano, Retirement Income Options on January 29th, 2024. We are into earnings. We have a Fed meeting this week, but I thought let's start with TradingView. I want to show you just a couple of things about this website and why I use it. First off, they have a pretty neat community page. And if you go here to the trade ideas, I'm not going to use many of these, but I read them just because I like to learn what people are talking about. Tesla, obviously, in the news a lot lately. So you get your trader ideas here. And again, remember, like I've told you, the narrative that traders attach to their trades, you can generally ignore, but the technicals are pretty powerful. So pay attention to the technicals, not necessarily why they explain those technicals are happening. They have no idea. For the most part, technical traders don't pay attention to the fundamentals. They glom onto an idea that somehow justifies their trade and the way that things are moving. The narrative just doesn't matter in the short term. It's usually wrong. It's usually transitory. Even if it's right, it's not going to last. So focus on the long-term fundamentals, the long-term story for a company, and not the news of the quarter or the month or the week. They have a lot of great educational ideas, some videos. The Pine scripts are where a lot of the automations come from, and I pick out some of the best ones that I can find to put onto my charts, and I'll show you some of those today. They have a group of traders called Wizards. Let me see if they, here you go, Pine Script Wizards. These are the people who have become very, very good at this. So these folks, the wizards, are the ones that you should follow and you should try to keep track of, because generally they have some pretty good ideas. Lazy Bear is somebody that I use with some regularity. There's another one down here, Dr. GT or something. This guy, DGTRD, I use a couple of his. So there's only a few dozen of these, actually just a couple dozen. So these are the people you want to pay attention to. These are the really good technical traders and whose ideas that I often use, or at least I use their technical charts to see if my thesis on something is about right. So this week, I'm going to cover just 5 dividend stocks that I think you should be selling cash secured puts on. These are stocks that I am looking to sell cash secured puts on. If you've noticed in the last couple of months, I have really just focused on covering the actionable ideas week to week and month to month, really. And I'm going to stick with that. Expect to keep getting your monthly options expiration update, and then 1 or 2 other retirement income options per month, depending on what's going on. If there isn't a retirement income options article for a particular week, go back 1 or 2 weeks and take a look at those, because they're generally still in play. So I don't have this all the way written, but the first company that I was going to cover is Ford. So let me just run through the charts and what we're doing here, and we will whip up some OptionStrat charts for us as we go. So as we know, we use the TradingView weekly time interval screener to find some ideas. I've recommended Bristol Myers, Pfizer, Ford's in here somewhere, Ford recently. And today I'm going to talk a little bit about Nutrien, which we have made a lot of money on in the past, and I think we're going to make some more money on it now. In fact, I think I'm going to put Nutrien on the February Grandpa Stocks list. If it's not on the Grandpa Stocks, it'll be on the Dividend Stocks. I want to read up a little bit more on their finances just to make sure they qualify for the Grandpa Sleepiness Factor, but at a minimum, it'll be on the Dividend list for February. So where are we at? This is a chart from Shooter, which shows the Elliott wave for Ford. Of course, I already like the fundamentals of the company. You know my thesis. EVs are set to take off in 2026 and 27. They're going to have a lot of freed up real estate. The CEO, Farley, has been talking about how they're going to need about 1/3 less labor in the future once they switch completely to EVs. That transition is going to take until 2030 to 2035, depending on the country. In the United States, it's going to push into the 2030s, but in Europe, it'll pretty much be complete by 2030. They originally were targeting 2027. Looks like it might be 2028 will be the last year that they make internal combustion engine automobiles in Europe. So you're going to see Ford with a lot of freed up real estate, and they can do several things. They can sell it, they can rent it out, or they can use their fourth industrial revolution technology to build different stuff other than cars, which we've seen them already do with ventilators. I think that there is a world of medical equipment and military equipment, as well as aeronautics, that they can get into. So expect Ford to break out at some point based on not just the EV story, which is at the moment a little bit negative in people's mind, again, a trader's narrative, but eventually people will figure out, holy cow, their margins are going up, their revenues are going up, and they're cutting debt, and they're buying back shares, which is what they've promised to do in the next few years. So I'd say by 2026, they're probably buying shares back. They originally had said 24, 25. I don't think that's really going to happen. However, this pessimism, this doubt on Ford, I think is something that we should be buying. In a worst case scenario, let's say the recession hits because the Fed screws up, you could see Ford stock go down in the upper single digits, according to Shooter. I don't think we're going to get a negative Fed surprise. I think we're going to get a positive Fed surprise now that nobody expects it anymore. So here is my chart on Ford, and I'm going to show you a couple of indicators here. I'm going to start with this one. So this shows the long-term trend for Ford. You can see it's moving up. It's broken out of its uptrend in the short run, and this area right in here coincides with Shooter's Elliott waves. So my bottom fishing price based on volume analysis, Shooter's bottom fishing price, and the retracements, these orange lines that this automated chart finder has, all land in that same price range of the upper single digits. Not so sure that we're going to see one more dip. We might. That's why you scale in a couple of times. If you already have a position, you should be looking to sell puts into this band. If we turn that off, if we turn that on, you see what the shorter term range is. So there is a little bit of downside, however, awful lot of upside. You're never going to get this line on the bottom perfect, on purpose anyway. You might hit it on accident once in a while, but in general, you know, having bought down here when I was talking about it, selling cash secured puts in this range, again, you might get some choppiness, but if the Fed surprises to the upside, starts talking about quantitative tightening going away, talking about interest rates getting cut, we're really poised for a lot more potential positive surprises than negative surprises. So I like to sell the March $11 puts for 50 cents, or 55 cents would be even better. Get your 5%. I just like using those round numbers. But even at 42 cents, that's not a bad trade, right? You're making about 4% to hold this for about 8 weeks. So that's 2 months. There's 6 2-month periods in a row. There are 6 2-month periods in a year. So just the shorthand, rough math, you could say, well, that means my annualized rate of return is about 24%. 6 2-month time periods times about 4%. That's a pretty good rate of return, 24%, I think. If the stock is put to you at 11, and you have a net cost of 1040-ish, 1050-ish, 1060-ish, right in there, I'm pretty much okay with that because of what we saw on the chart. All right, so we're using these charts to figure out, all right, should I be doing nothing, which is the answer quite a bit of the time, or should I be selling puts, or should I be buying the stock? And the answer here is you should be buying the stock. You should be selling the puts because Ford has a great outlook. And by the way, if the Fed lowers interest rates, that means the dividend paying stocks do better. And what I would anticipate is that the real rate that we're going to see sometime soon is going to be 0. What is the real rate? The real rate is the Fed funds rate minus the inflation rate. So if the real rate that's prevailing is around 0, which is what the government can afford, so anticipate that it goes in that direction. That means that your dividend paying stocks, your companies that pay 4, 5, 6% are going to do pretty well, especially the companies that are buying back shares or have a high dividend growth rate. Other companies that fall in there, like Pfizer, I just recommended Pfizer. Is there more downside to Pfizer? There could be. Let's take a look at a different view. So if we take a look at the trend, it's down, but it has a strong potential to pivot back up. So I think we should be focused on the long term and how far down this one has gone. Can it go lower? Yes, it can go down in here, possibly. I think we're in the bottom fishing range right now. Again, I think it's more likely that the Fed surprises to the upside versus to the downside. It doesn't mean they can't make a mistake. The Fed has done it before. If the Fed makes a mistake and doesn't talk about loosening, then you're more likely to see this area down here several dollars below the current price. I'm not too worried about trying to catch that last 5 or 10% to the downside. To me, this is a stock that is beat down way worse than it should be, and it's going to return back up into this range. How long does that take? I don't know. My guess is a year or two, but as long as it's turning up to catch up, I'm good with that. So which puts do I want to sell? Go over to OptionStrat if you got it. Otherwise, just play with whatever you play with. Again, I think you can go March. I'm going to sell right at the money, and I'm going to collect about $1. That's only about a 3% return times 6 periods, 18%. What do we know about when the option premiums shrink? What is that an indicator of? Anyone? Teresa, you can answer if you want to. When option premiums shrink, what is that an indicator of? This should be front and center in your mind. Oh, come on. No, it has to do with risk. If option premiums shrink, that means that there's risk being squeezed out of the stock. It means the stock is pretty beat up, right? There's not a lot of speculation on the downside. When the premiums are higher, that means people are still speculating on the stock falling. And now you have to be right about them being wrong. But when there's a smaller premium, it's an indicator, one, that you should probably be nibbling in. And two, if you do sell some puts, they may or may not get put to you because not a lot of people betting against Pfizer at these prices. So if you can get $1, right, this is trading at 98 cents right now, or $98 for a full lot. You know, if you get a $100 bill out of this, which is about a 3% return for the next 2 months, you're doing pretty good. Now, one of the things to keep in mind with Pfizer is that they should be paying a dividend pretty soon. So you might want to just take a look at when the ex-dividend date is. I will do that for you. You can do that over on Seeking Alpha. Just go to the Pfizer dividends page. Ex-dividend date was a couple of days ago. So if you don't own Pfizer already, and I bought it right before, right? Remember I told you to buy some last week. At this point, you might as well sell the put because you're not missing out on any dividend if you wait. So I think right now is a good spot to sell a put if you don't already own the stock. Again, because you're not going to miss out on any dividend. All right, next, Bristol Myers. This is the auto charting, looking for the most prevalent pattern. Let me type in the word auto. It'll do it for you. So put that one in and that one in. We will turn them off. Here we go. Indicator. So right click, indicator title. There you go. Now you don't see the title. You just see it over here. So that's where the uptrend should go on Bristol Myers. That's where it should head back to. This is the risk range we're in right now. So there is a little bit more downside right into here, into the lower 50. I mean, this would be, around 40, which is right by my bottom fishing based on the volume. So there is a little bit of downside on Bristol Myers, but you can see where it's going to head back to. It's going to get back up into this zone. That's what this is based on. This is based on where it's been and what the longer term trend is. So when you get that gap between its long-term uptrend and where it is now, that's a lot of makeup time, right? So the trip from down here to here is a really good trip. Now, once you're back up in here, you have to decide, can I still beat the market? And usually the answer is no. So you're looking to close that gap. Bristol Myers, again, March, 2-month hold, you get $2 for the 50. If you don't want to already be in the money, go down to 49, get $1.50. Take a look at your ex-dividend date, just passed, so you don't really need to buy the stock just yet. Mitigate some risk, sell a put, right, down here at 49, get $1.50. Net cost is 47.5, which is below 49.5 of today. And I would say that's a pretty good price. You don't need to, and Shooter doesn't have a chart on this one, but you don't really need to be perfect. Again, you're looking not so much at this. This is just where you're accumulating. You're looking for this. When it goes back up and catches back up to its long-term range, that is where you get excess returns, is closing that gap. You know, and then it chops around again. Jump on over to Intel. Shooter really likes this one. This chart's a little bit old. It was pre-earnings that kind of beat the stock up. Stock dropped $3. So this purple support band is usually the one to pay attention to. And where is it? Right around 44 bucks. Where is Intel right now? Just below 44 bucks. This is a line that I have set up for a bounce. So it's really close to a bounce area. Can it hit bottom fishing way down here in the 30s again? It could. I think the worst that we'd probably see would be upper 30s there. See that bounce right there? And then it bounced down, right? Tried to fight through, couldn't, came down here, and then broke through it right there. I'd be surprised if you see this one drop below the moving averages. I think you're right on top of a spot where you should be selling cash secured puts on Intel, because we love them long term as they start getting all that government money in the next couple of years. I think this pullback is a golden opportunity for you. Again, with the March, I think the 43s are just fine. Basically selling at the money, get almost $2 for it. And I think the volatility, you'll get the $2. So just put your order in for $2. Here's the thing. If Powell is nice on Wednesday, you're going to wish that you made this trade. So I'd be looking to make this trade today or tomorrow, or before the Fed meeting. And if you have to take a couple pennies less, then you take a couple pennies less. Then we'll finish up on Nutrien, because I've been talking about it very loosely the last couple of weeks. This is a stock that we bought way down here, and I actually owned before the merger. Got that big run up. We sold it pretty much near the top, and we've ignored it for a couple of years now. Here it is, getting into this jitterbug area. Shooter has a primary wave in the low 50s, and there's really huge support down here in the low to middle 40s. So that's probably your downside if there's a negative surprise. My chart lines up about the same. There is no auto chart pattern on this one. So let's take a look at these. I'll figure out a way to make this prettier. So let's look at the long range. It's getting to the very bottom of its uptrend. Pretty big support here and here. This bottom one is like Armageddon. Go ahead and turn that one off. You see it's a pretty wide range. This solid red line here is probably where it's going to head back to. So 100-ish, a year or two out. Does that jive with the other chart? Yep. Those red lines, those are the target lines for this particular technical indicator. So, at $50 a share on Nutrien, you could just buy it. I'm not nibbling in just yet because it's not an S&P 500 stock. I really want to see it turn up before I buy. So I'm just going to sell the puts. And remember, Nutrien can't get into the S&P 500. It's a Canadian company, right? Am I right about that? Nutrien's not in the S&P 500, is it? I don't think it can be. Let's find out. Let's ask bar charts. This is the easiest way to find out this information. Every time, and you can do this for free, right? It's not an S&P 500 stock. I'll always have it right here, right? So if you go to pick stock, shows what indexes and sectors it's in. So Nutrien is not an S&P 500 stock. It's Canadian, so it won't be an S&P 500 stock. There are certain foreign stocks that can get into the S&P 500 based on their business mix. This isn't one of them. I think the worst you're going to do is somewhere in the 40s on Nutrien. So again, that's pretty close for me. We know that it's going to trend back to the red lines that both of these indicators show. See how close those red lines are. So this is where it's going to head back to. I really wish I could make that prettier. I did it once. I don't know how I did it. Who knows? I'll set up a template. You have to do your own thing on yours. So, there you go. That's what I wanted. We'll have to see. They're working on their software and they're updating everything. They have a new screener coming out that is just amazing from what I can tell. And they're in the process of adding all the things that I like, which are from the old screener. So they're going to combine all the new screener features with something they call 2.0. And it has flagging isn't available yet. So basically you can't put a watch list in just yet, but they're adding that functionality. But look at all these different types of screens that they have. And you can do it by, what the analysts are saying. All right, so your analysts, strong buys. If you just want to look at communication stocks, strong buy, dividend yield above 5%. There you go. This is a really nifty system at this point. And once they add the watch list functionality back in, This is going to be one of the handiest things I've ever seen. So I've been waiting for somebody to do this, and I bugged Stockrover for years and just ignored me. These guys, you know, I've been talking to for a couple of years, and I'm sure they were already on it because they're pretty big. But this is going to be a pretty cool screener. So if you don't have TradingView, you're managing your own money, you know, good luck. You know, you better have something robust for what I've been showing you today, which is not just selling the puts, it's how to sell the puts and how to find your trades. So with Nutrien, I think you can sell again March 50, get about $2. If you end up with a net cost of 48 on Nutrien, I think you're okay, and you just wait for it because it's going to head back to 100 again. So if you can have a dividend stock paying whatever it's paying now, 5%, right? 4%, very low payout ratio, right? So they're in no danger of having to cut the dividend. Grows at above the rate of inflation. They've been buying shares back, which is what I really like. And yeah, I think it's time. I think we're gonna double our money again on Nutrien. We might get lucky. You know, the chart that Shooter shows, I'm gonna show you his long-term chart. And look at that price. I mean, he's got it potentially going up to $200 a share. That's pretty high. So he thinks it's going to run up to around 80 and then do a pullback and then shoot way up here. We'll see. We'll see. 200, they'd have to buy back a lot of shares to get to 200. You know, this is the natural resistance to challenge the all-time highs again in the low 100s. But if it breaks through, it could really move. All right. Any questions? No, nothing. All right. Well, I'm gonna go make lunch then. Yeah, we've got all the February stuff coming out next week. All right. Take care.